Ladies and gentlemen, the markets are breaking down today, as you already know. S&P is down close to 4%, with other big tech stocks like Apple down almost 9%, Meta's down 6%, Amazon down 7%, Nvidia down 7%, Google down 3%, so on and so forth. There's a lot of pain out there. And here in this video, I will get you caught up to speed in who's retaliating against the US, what the Commerce Secretary has to say, Caroline Levitt, to Larry Summers, Fed Jefferson. We're going to try to put this into context. Is the correction over? Or is this just the next leg of it? And I'll tell you, there's not a lot of fear out there, which leads me to be a little nervous that the correction is not over. But more on that in just a few moments. We also have major economic data coming out tomorrow morning with non-farm payrolls, the unemployment rate, and a speech from Fed Jerome Powell. So if you thought today was crazy or last night, tomorrow could be equally as insane. So be prepared for that. Now, Fed Jefferson says, I don't want to overreact to what may be proposed today. Jefferson says it will be important to take our time and think about the impact. Larry Summers says it's clear that the U.S. computed tariffs without tariff data. Goldman Sachs asset management executive says tariffs are a quote-unquote growth shock that are contractionary. Which, before we get into all of the other headlines that we're going to cover here in this video, I want to establish something. This is a recession catalyst. The question is, how long are these tariffs going to be enforced? Is the administration serious about this? If countries retaliate, like France, Europe, Canada, countries that have already vowed to retaliate, does Trump retaliate against their retaliation? I mean, Trump kind of nuked everyone already with yesterday's tariff announcement. I think it's really just sending a message that Trump doesn't care about the economy if he's just willing to retaliate again, right? These tariffs are designed to put the economy into a recession. The economy is very good at navigating problems that, are slow moving. When you shock the economy like this, it will cause a recession. And to some extent, the damage is probably already done. And that's why stocks are selling off so sharply today. And you can also see today there's not a lot of fear out there. Sure, indexes are selling off a lot, but look at XLP, Consumer Staples ETF. It's almost at a new high. When there is true fear out there, everything will sell off. Same is true again for TLT. TLT is only up 0.9%. This is not true fear. If there is true fear, TLT would be up like 3 to 5%. So there's not a lot of fear out there, but there is concerns about a recession. Look at oil today. Oil is down 7% today. That is because of fears of the US economy going into a recession. But they're not fearful enough to cause, TLT to get a big move. I mean, sure, 10-year treasury yields are down 15 basis points, but TLT is not moving much. So what I'm really trying to say here is the fear in markets is really not representative of the downside that we're currently seeing. The downside in indexes in areas of markets is large, but the fear is not matching that. There's not as much fear out there today as you would think if you ask someone, how scared would people be if the S&P was down 4% in a day? People would say, yeah, people are scared shitless. People are not scared shitless today. You see that by where money is going. XLP wouldn't be green today, and bonds would be doing very well today. Now, also in the news today, China-US negotiations are likely soon, according to Chinese advisors. Trade negotiations between China and the US are likely to start soon, given President Donald Trump's penchant for deal-making, but a quick settlement looks difficult, with China calculating that the U.S. position will be weakened by a deterioration of its economy and markets, according to Chinese policy advisors that told MNI. Morningstar DBRS on U.S. tariffs. They say, quote, if implemented, it is bound to slow U.S. economic growth in the near term, raise consumer prices, and firms' input costs. And Mexico's President Sheinbaum says German automakers should export auto parts within the framework of the USMCA. And within the services PMI report today, we'll get into those numbers in just a moment. There is, quote, some worries over the impact of federal government policies, especially in relation to tariffs, meant confidence in the outlook fell to its lowest level since the end of 2022. Mexico's President Sheinbaum says a lack of new U.S. tariffs on Mexico is good for the country. She says the country has built a good relationship with the U.S. through dialogue and cooperation after Trump's tariff announcement. India's trade ministry says India will hold virtual meetings with the U.S. on bilateral deal this month. And India is considering to provide help to affected export sectors. The Swiss finance minister says he will travel to Washington for IMF meetings. And the odds of a U.S. recession this year on Kalshi, the betting website, is up 8.1 points in the last 24 hours, now sitting at 53% odds. And Scotiabank cuts U.S. equities to underweight from overweight rating. Lutnick, the Commerce Secretary, says U.S. team is talking to trading partners today. Lutnick says the 20% China tariff would drop if Xi offers fentanyl cuts. And this tariff frenzy sets up a critical Powell speech on Friday. Friday remarks by Fed Chair Jerome Powell have been in the calendar for weeks, but they take on a new urgency after President Trump's tariff announcement shocked investors and business leaders. The speech, quote, will now be one of the most important Powell speeches in 3 years, Andy Brenner of Nat Alliance Securities wrote to clients. In his most recent comments, Powell has said that monetary policy is still in a restrictive stance, a, quote, good place, given that inflation remains above the Fed's target. Tariffs could threaten both sides of the Fed's dual mandate. However, by increasing inflation pressure while also dampening economic growth in the labor market, Powell is scheduled to speak at 11:25 a.m. Friday morning. And U.S. Commerce Secretary Lutnick says U.S. tariffs will go up if a country retaliates. Morgan Stanley now expects no interest rate cuts from the U.S. Fed in 2025 versus the prior forecast of 125 basis point cut in June. That is starkly different than what markets are pricing in. As of right now, markets are pricing in the first Fed cut in June at 63.8% odds. Okay, there's about a 20% chance of a Fed cut coming May 7th, and I think Jerome Powell's speech on Friday could move those odds quite a bit, considering there's still almost 5 weeks until May 7th. White House Press Secretary Leavitt says Trump is focused on lowering costs while raising tariffs. The only way you really do that is during a recession, because if there's no recession, tariffs will cause prices to move higher. But if consumers react to those higher prices by buying less, companies will not be able to raise prices. So the only way this happens is if you have a recession. And Leavitt says tax cuts is the second step of Trump's economic agenda. Canada's Prime Minister told Trump last week that he would retaliate on auto tariffs. And he says that we need to reset our overall relationship with the United States. And he says, I am not at this time planning to coordinate Canada's response with other nations. And the WTO, the World Trade Organization, says tariffs could lead to a 1% decline in global goods trades in 2025. Canada's Prime Minister says until the pain caused by tariffs becomes impossible for the Trump administration to ignore, I do not believe they will change direction. So Carney's basically saying there's going to be so much pain, there's going to be a recession, that Trump will be forced to U-turn trade policy. And until that recession comes, he's not expecting much of a change from Trump. And Canada's Prime Minister says that an era of integration with the U.S. economy is, quote, over. And Canada will match U.S. tariffs on passenger vehicles. And U.S. Commerce Secretary Lutnick says Trump will negotiate only if other countries fix their tariffs and non-tariff barriers. French President Macron says all instruments are on the table to respond to U.S. tariffs. And France's President Macron urges companies to pause U.S. investments. He also says if Europeans work together in their response to U.S. tariffs, we will succeed in dismantling U.S. tariffs. And France's president says the response to Wednesday's announcement of U.S. tariffs will be more massive than the previous response. So, vowing some retaliation here. And he says the U.S. economy and consumers will become poorer and weaker. Now, we did have ISM services PMIs that came out today. Headline number for March came in at 50.8. The expectation was 53. So that came in quite a bit weaker than expected, almost in negative territory. Business activity came in at 55.9 versus estimates of 54. So that was a little bit better. Employment just plummeted to 46.2 versus expectations of 53. New orders came in at 50.4 versus 52 as was expected. Prices actually came down a lot. We were expecting 64. You came in at 60.9. That's lower than February's 62.6. So this was actually a weak services report, but also weak on the inflation side as well. So even considering that, with the sell-off that you're seeing in markets, TLT only up 0.6%, again, is not representative of fear out there. There's not fear out there, which is crazy that the S&P is down over 3% and you're seeing such a lack of fear. People are very stoic to what's happening in the markets today, which again makes me a little nervous that this correction cannot be over until you have mass capitulation. And we don't have that. So correction, my friends, sorry to tell you, is not over. But again, coming out tomorrow, we have non-farm payrolls for March, expecting a number between 135,000 and 80,000. Lower than 80,000, that's really bad. Above 130,000 or so, that's likely going to be seen as positive. The unemployment rate is expected to remain stable at 4.1%. And again, we have that speech from Fed Jerome Powell at 11:25 in the morning tomorrow. And people are going to hang on to every word Powell says. Now that we know what reciprocal tariffs are going to look like, we know how much pain that's going to cause in the economy, likely a recession. How does Powell respond to that? Is Powell just kind of neutral, like he's just going to let things kind of see how they play out before responding? Or is Powell going to take a more, proactive response in trying to protect the economy? I mean, hard to say. I guess if you're Powell at this point, he's not the one that's going to be blamed for the recession. It's going to be Trump. So I don't know. It could go either way with Powell coming tomorrow. But I do think non-farm payrolls, unemployment rate, and the speech from Powell is a huge catalyst and will give us room to fall a lot more or maybe recover a bit if the economy shows that it's still doing okay. So in other words, expect a lot of volatility tomorrow. And bottom line, this correction is not over with. The big question now is, are we going into recession or not? If we go into a recession, what are earnings going to look like on our markets? And this is not like a typical recession, I would say, especially if these tariffs go into effect and then stay into effect, because they could be very damaging to the EPS outlook for the S&P. So recession or not, that's one thing, but even without a theoretical recession, which I think is like 80% odds at this point, you're still going to have an impact on the S&P's bottom line margins with tariffs like this that literally just like nuked everyone. Like nobody was expecting this kind of a shock. Okay, so the correction's not over. Okay, we're way too high. We're still pricing in a far more optimistic outlook than what we're going to see. And I think we're still set up for very large downside. We broke below the 300-day moving average today. Your next stop is your 500-day moving average, around 502 on the SPY. As I've said before, once you get to 500 on the SPY, I think the risk becomes a lot more in balance, right? Roughly $100 of upside potential on the SPY, back to 600. Roughly 100% of additional downside pressure on the SPY, down to about 400. Now, if you do go into a recession, then you could fall below 400 on the SPY. But, I mean, that would be a crazy peak to trough decline regardless. That would be roughly a decline, if we hit 400 on the SPY, of 35%. So could you fall more than that? Of course. If you fell 40%, that could put you back to 366 on the SPY. Based on my calculations, if we have an average recession, you could see the SPY at about 340, which, you know, is near the 2022 lows. So got to be prepared for that. At the same time, you want to be prepared for some of this trade, recession trade, I don't even know what to call it, right? Trade war, recession war, to come to an end and markets to recover. But the risk is still way more skewed to the downside, right? It's not like you have 5% downside risk and 40% upside risk like you had in 2022, right? 2022, at the lows of the market, you had priced in a lot of bad news. I mean, you had like 5% downside risk, but massive upside as well if things got better. That's not where we are today. And I think you still need to acknowledge that even on these really rough days. So let me know what you guys think about this down below in the comment section. If this makes sense to you, let me know. If it does not make sense to you, let me know as well. And keep in mind, tomorrow is going to be a really big day for markets with the unemployment rate, non-farm payrolls, and the speech from Fed Jerome Powell. You guys have a great rest of your day, and I will see you in the next one.